Welcome to Chit Chat Stocks. We have another episode of our weekly Power Hour. I am joined, as always, by the one and only Brett Schaefer. My name is Ryan Henderson, I should mention as well. And we've got plenty on the docket for today. We've got news on Macy's, a rogue employee, maybe hiding a couple of dollars worth of expenses. I've got my small cap of the week, and we're actually going to go back through. I made a little watch list of all my previous small caps of the week to see which has performed the best. And I think it might surprise you, Brett, but a little tease here: the best performing small cap of the week is up 920%. So year to date. So
Wow, that's
yeah,
small caps for you.
yeah, I guess. The worst is down quite a bit as well. So, you get both sides of the spectrum there. Brett's got some topics maybe addressing what we're gonna call the rebubble. A certain meme coin from a certain, influencer is going viral. So we're gonna talk about
Yeah,
that
that's a
as
good way
well.
to put it. Yeah.
But before we get to that, I wanna mention 2 things. First of all, there is a job opening at my company, finchat.io. It is one of our sponsors. It's the platform we use every day for financial data. It's a research analyst position. You would be working directly with me on all things content and growth. And it's a lot of equity analysis and equity research. So if you're interested in that at all, reach out to me at ryan.henderson@finchat.io. And then, second thing, a quick word from our friends at Public. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a bond account at public.com. That's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So while other people are watching their returns shrink, you can sit back with regular interest payments, but you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks. All right, Brett, where do you want to start?
I don't know. Well, we got a serious topic from you. For anyone that's watching on the old YouTube page, I know most people listen on Sunday morning. I have switched up my recording location. Hopefully, the Wi-Fi is a bit better here, but let us know if the audio or the video doesn't look nearly as good. But it seems a little bit more stable now. That's what happens when I guess a bomb cyclone, as they call it, hits your local area. Let's talk. I mean, the Macy's thing is interesting. It's just, I guess, with earnings season out of the way, it's hard to talk about stuff as much. That's exciting, the Macy's. Employee went off the rails. Maybe we can start with that. Maybe we can
Sure.
talk about your small caps. You got a lot of stuff there. What do you want to do?
Yeah, it's not that lengthy of a topic. I'm not sure it's that big of a deal, but Macy's was forced to delay reporting its full third quarter earnings today. This is a quote, so it's not today, but they were forced to uh, delay their report after discovering that one worker covered up $132 million to $154 million in delivery expenses over 3 years, which is an insane amount. So what happened? An employee working in small package delivery expense accounting filed phony reports from Q4 of 2021 through November 2nd of this year to intentionally hide expenses. The retailer reportedly had a little like 4.4 billion in delivery expenses over that time, so that means 3% of the total now appears to be unaccounted for. It's a big jump in expenses. I saw some people r- remind the world of Scott Galloway's take from 2016, which has not aged well, which said the future of retail looks a lot more like Macy's than it does Amazon. Not that this actually has anything to do necessarily with the retail business, but yeah, that unfortunate take there. Any thoughts here? I mean, there isn't. It's not that big of a deal, but wow, that employee went, I guess, off the rails.
Yeah, that's. I mean, what can you say? What's the Buffett quote? There's going to be some level of malfeasance or something along those lines within the Berkshire Hathaway ecosystem when they have 500,000 employees. I think this is an example of that. And how did it didn't affect cash flow? I'm correct, right? It's just hiding the delivery expenses, so it's just accounted for incorrectly.
I assume so. Honestly, I don't know if they gave enough color on it, and I'm not sure. I think I probably could have checked the earnings report if they've filed it yet. I don't see how it could affect cash flow. Let me check here real quick.
Yeah, who
It
knows?
doesn't really
Either
matter,
way, it
and I'm not really looking to
yeah
buy Macy's
the
anytime soon. So,
yeah is there any path where this company doesn't just kind of go to zero like Sears?
you know what's
You
wild?
kind of see any?
It's up 9% in the last 5 days. Not really sure how
Well,
that happened. All right. Well, yeah, no, I mean,
do you
we
know what
look
it?
at it over the last 5 years.
I got
What do you think the returns are?
last 5 years. Oh, I got it loaded up right now. 5%, at
Oh,
least excluding
well,
dividends.
yeah.
What do you think the returns are since 1992, excluding dividends, cumulative?
We should probably look at the dividends because the dividend yield is pretty high, so it might matter here. But just the price performance. Well, I mean, it was at the top in its heyday, right? So I would guess this is 10x over the last 30 years.
100% cumulative.
Wow. Really?
Yeah, just 100%. Now let's look at 1992 total return. Well, hey, 239%. Okay. Still significantly lower than the market average, but market cap still $4.5 billion. I would say the worst is yet to come. I mean, is there a single young person that shops at Macy's anymore? Does anyone care?
Maybe. It's
Maybe
not
one.
it's not cheap for starters. Not that I mean, maybe they go after the luxury market, but yeah, it's just I don't know. They're kind of the iconic, not iconic, sort of the poster child, I guess, of the demise of malls, shopping centers. Like it might not be Amazon that disintermediates them, like or maybe it hasn't been Amazon that's really disrupted them, but just the overall, I'd say Shopify has probably killed Macy's more so even than Amazon. I don't know how much retail
Yeah,
shopping goes on in Amazon, but
everyone.
not yeah, or not retail apparel. But anyways, okay. Macy's 150 million dollars more in expenses than I thought, or maybe recategorized. The other thing I want to talk about though is the small caps. Should we move to that?
Let's do it.
Okay, so couple things here. I'm not going to go to my small cap of the week first. I'll touch on that in a second. But two things. First of all, a while back we did our small cap of the week presented by Yellow Brick Investing, which as I was going through all these, actually reminded me how thankful I am for Yellow Brick Investing because there was a lot of these. We've done 24 small cap of the weeks so far this year, and I think just about every single one I have used Yellow Brick Investing for. So if you go to joinyellowbrick.com, you can just look up the ticker and you'll find a high quality write up, most likely on that company. Anyways, we've done 24 small caps of the weeks. You may have already read this, but how many do you think have had positive returns year to date?
I guess I don't have it in front of me, so half? I'm
Pretty
just going for
close.
the coin flip. Yeah,
Pretty
going for the
close.
coin flip.
13 of the 24 have had positive returns. 11 have had negative. Can you guess which ones are the best performing and worst performing?
Ooh. Now that means I have to remember what the small caps of the week were. Do you have a list on the sheet?
Um, I have it on a dashboard in FinChat. Let me categorize it real quick.
Do you wanna maybe share
Oh,
that
oh
with
my
me?
gosh. Uh, yeah, I can maybe screenshot it. Just um, it's
Well, I'm
too
gonna
long to
guess it's
screenshot. Go ahead and just
the way
take a stab at it.
the way you're teasing it, makes me think it's one of the shitcos, but I still can't remember. Is it the nerdy the nerdy one that you liked?
Nerdy is down 57% year to date,
What
actually.
about the one there was one at the time we looked up that was up like 400%, so maybe it's that one?
I think you might be thinking of the right one. It's j- and just to clarify, year to date returns, we haven't been doing this since the start of the year, so it's not indicative of the time that we looked at it onward, but it's still, I guess, fun to look at. The company is called Dave. It was that financial services app that, like, was growing gangbusters. Up now, yesterday it was 920%, today it is 989% year to date. Uh,
Yeah, up 6% today, $93. Why? What's going on?
I don't
Memes?
know. The
I
financials
guess
actually
it's
look pretty
down.
good,
Okay.
if I remember correctly. It's still down quite a bit from its highs in 2021. Must have been a big SPAC
It's
or
down
IPO.
70%.
Yeah. But this does go to show, and I'm not sure if that was a SPAC or an IPO, but busted IPOs, busted listings, or broken listings from that 2020 to 2021 time frame is can be a very profitable pond to fish in. Now, you got to sort through a lot of crap and a lot of bad businesses, but there are probably some companies that are on the cusp of turning the corner to profitability and have real growth and real users and a real business, and everyone just dismisses them because of the return so far. So Dave has kind of been one of those, it appears. Um, but yeah, it's far and away the best performing stock from that list. The other one, the next closest one, next best performing, and we're going through some of these all these old ones here, is I believe SoundHound AI, which seemed like a horrible business. So probably won't spend too much
That's a
time on
Motley
that.
Fool favorite. People
Really,
love growth investors are falling in love with this one right now.
I remember looking at that and being very concerned. The worst performing stock is WAG Group. This was the dog walking marketplace. Um, and they were like kind of
I'm
making a
shocked.
pivot. Yeah, they were making a pivot to like f- pet pharmaceuticals or something, like some sort of inroads to the veterinary side of things. And it kind of got bid up, if I remember correctly, because the competitor, Rover, got bought out by private equity. And it seems like that's one of those areas where you only really need one marketplace, maybe not two. Um, but yeah, that's the worst performing. I don't know. I guess that's what you get with small caps. It's kind of fun to look at these because the spread is so wide from 1,000% returns year to date to negative 90% returns. It's you got to be very choosy and willing to cut things fast. Now, the other topic that I wanted to mention, you mentioned nerdy, which i- we talked about this must have been a month ago, maybe a little longer. And it's this platform marketplace for tutoring, like online tutoring. You help people. It's like basically it's just I don't know, it's pretty straightforward. You sign up for a tutor online, and it's mostly people. I think the main product is called Varsity Tutors. It's pretty simple. You set up a time, you tutor them, you pay out money to the tutor, and then Nerdy takes a cut of it as well. Well, anyways, the business was not in shambles, but it was not performing well. It was not profitable. The marketplace itself was not growing that much, but they were talking about turning to profitability. And the the whole reason that I was even remotely interested in this thing was the CEO had bought up a lot of the stock, and so I just bought like a tiny starter position. And I'm kicking myself because I they reported a quarter and the quarter looked rough. It was like the marketplace wasn't growing. It looked like they were had all this negative headwinds, if you will. When a marketplace isn't growing, it becomes an issue. They're starting to like it's like they're running into a wall with marketing spend essentially. Uh, so I was like, why did I buy this? It's so stupid. I should have so I just sold it. The stock is up 56% in the last month, I think due entirely to insider buying. So the CEO is still on a buying rampage. In the last 6 months, he has bought 20% of the shares outstanding in the open market, and he's made some private transactions as well, buying shares from, I assume, VCs or whoever backed them. So I don't know if he's just setting the like bid on every purchase right now, or if he's planning to take this company private single-handedly, but I have never seen a founder CEO, like, essentially reacquire his own company in the public markets.
Yeah, that is a lot. Is
It
it that good of a business? Or is he
maybe he's just bitter at the valuation. I
Yeah, it's almost like an extreme RH situation. I don't know.
I wonder if I should probably go back and look through. I wonder if he sold a bunch when they came public, and now he's just using the proceeds to reacquire the company. I mean, obviously, he believes that the business is worth something. Like, he believes it's worth more than they're getting value for in the public markets, and probably no one knows the better business better than him, given that he's the CEO and founder. Um, yeah, it's pretty I don't know, like, I don't love the business, which is why I kinda discarded it. Like, do I really wanna own something where I'm just waiting for the insider to buy the whole thing? Um, but given his pace of acquiring shares, it's hard to see how this doesn't go up, because if it does drop, he has basically stated that he's going to buy the shares himself.
It's true. It's almost like Buffett with Occidental Petroleum. That's a you know, I guess that stock hasn't really done too well, but he seems to have a very strong bid if it goes to a certain level. And well, I guess for the last 5 years up something. It's up 30%. When compared to the S&P or Nasdaq right now, everything almost looks bad. You know what someone else mentioned here in the YouTube comments? And for anyone watching live, apologies. I guess my audio has been okay, which is fine for the recording, but the video is a bit laggy. Better than last time where it was just inconsistently hopping in and out, but I'll keep trying to fix that. We want really, you know, as high quality of image as possible here, and we'll just keep trying to improve it until we get there. We're not a professional studio, and maybe I'll just have to upgrade the Wi-Fi system. But all right, someone mentioned Root. How is that done? Didn't we look at that one as well?
I don't think we ever looked at that. That
Maybe
was
that was a
never
separate topic, but
wasn't on my list. I can check how it's
do
done, though.
you want to guess what that's up year to date? Yeah, you want to guess what that's up year to date?
What do they do again? Is it car insurance or is it
It's some sort of insurance. I think they sell their stock.
that's their business is selling shares? Company
Yeah.
offers automobile, homeowners, and renters insurance. Wow, all right, full gambit. Well, I'm looking at it now. Year to date, the stock is up. Oh boy, wow, 10 bagger almost. Oh my gosh, this is okay. This is what concerns me,
825%.
and we're gonna do a show some point here. So check your feeds, be ready for it. We're gonna do a show on places to hide in markets of excess and maybe a bubble, if you will. This is the stuff that concerns me. It's not that big tech trades at 30 times earnings. That's not something I'm excited about, but that's not what gets me worried as an investor. It's the horrible companies that are up 1,000%. And I guess I haven't relooked at Root, but I remember visiting them one time and thinking that was not a very good business. And the stuff like you're about to talk about it, the stuff that is not even a business, the what do they call them? Shit coins, the meme coins, if you will, that are getting bid up out of
Well,
nowhere.
that's what they
Fart
all are to
coin.
me.
I
Yeah.
know. I know. It makes
Yeah, it's all one big joke. Yeah.
it's so funny to me when like a meme coin gets like I think fart coin was a thing and it got bid up pretty high, which is kind of funny. But I love when like crypto enthusiasts are like, "Wow, this is a bubble." It's not like my cryptos aren't, but those are a joke. It's like I don't.
Yeah.
Maybe it's my new. Maybe I just maybe there's some sort of utility that I don't understand. Although I would venture to bet that 99% of people that own crypto are not owning it for the utility, or else you want to own it. Um. So
Number
yeah,
go up, that's
what's
why, and
what's the difference?
yeah, and if the only difference is the name, at the end of the day, what matters? We have another question here. It says, "Please share your thoughts on oil and commodities." Don't have much on that, but I wanna ask you, Ryan, can you give a guess of what the price of oil is right now? WTI, crude oil futures, I guess according to Google search. Hopefully I'd assume they're correct.
Ooh, what the price is currently, and that's like per barrel.
Yeah. Price for I believe it's $100 barrels, but yeah,
Okay.
whatever the
Um,
price is.
yeah, I'm so not versed in the commodities market. Let's go $75.
Wow, pretty close, 68 bucks.
Okay.
Not too bad.
That's
It's
closer than I was
it's
hoping for.
it's down in the last year. Yeah, I mean, it really hasn't gone anywhere. It's way lower than 2022 when the war with Ukraine started, between Russia and Ukraine, and it's not too much higher than 2019. I guess if we look back pre-pandemic, it was kind of in the 50s, and it's still way below where it was in that post GFC commodity boom of the 2011-2014 period.
It's so interesting
Yeah.
because so like there was so much of the this time it's different crowd in oil where there was so much talk about the world has underinvested in production and we're not going to see the same cycle where the price goes up and comes back down the way we have in the past. Now it's not down as much as some people might have expected, but I remember a lot of people talking about $90, $100 for 100 barrels, or $90 whatever oil prices.
I
Like it
think it might
was.
be a barrel. I'm not sure. I think it
we
might be
sound
per
so
barrel,
we
but
sound so
I have no clue. I
bad
think
with this.
this is all I know. Yeah, I don't know much about that stuff. All I do know is that I don't know what the price is going to be in 5 years, and therefore I'm not buying any of the stocks directly correlated with that because do we know how much governments around the world are going to pump the oil? No. Do we know how much we're going to be investing in renewables, nuclear, electric vehicles that could bring down demand? I don't know. There's just a lot of variables out there, and there are so many countries, there are so many companies, there are so many different incentives. If you have any sort of now, maybe you can play a hedge in your portfolio if that's something that matters to you, but having any sort of prediction here doesn't make much sense to me. Now, something like and I don't invest in these type of companies, but there's some, I think, more interesting theses out there on copper mining, coal mining, just given the dynamics of those industries and the restriction on supply. Now, I've looked at lithium miners before, and I don't necessarily like that industry because when you understand the fact that there's almost an unlimited amount of lithium in the ground, and it's just a matter of whether we want to, you know, bring it out, is that's kind of tough to have a thesis on whether what lithium prices are going to be at, because if push comes to shove, we can just get more of it. Well, what's my long term thesis?
Yeah. I mean, anything that's commodity dependent and it's not like a cornered resource, eh, eh, it's out for me. It just is. I just don't see. Now, would you consider banking a commodity?
Somewhat, but there's a difference between how you bring it to market, where you can be better than other people, and the price of money or your consumer app or the way you acquire customers, there can be a competitive position there. I'm not saying there isn't any money to be made in oil. Obviously, there is. People have made a ton of money, but as an outside investor, a small time investor, having any sort of predictive power on at least just oil and commodity prices, I have no clue.
Yeah, that's fair. All right. Did you read the CrowdStrike earnings at all?
I did not. How
So,
was it?
okay. Uh, okay. It was okay. The You remember when they broke the internet for the day and like maybe a couple days and businesses went down and flights were like,
Yeah, I remember when them and Microsoft caused the airline industry to freeze up, and then they blamed the airlines. It's like, that's really great customer service, guys.
yeah. Yeah. So here's the thing that's interesting to me. Annual recurring revenue grew, looked fine, but remaining performance obligations, and maybe I can pull this up here on FinChat. Let me try to grab this chart real quick.
Yeah, and while you're pulling that up, Ryan, take your time on that. I will pitch FinChat because for anyone listening to this, it'll be during the Black Friday sale, which ends on December 2nd, and you can get 25% off, an extra 10% off after our promo code. And it's a perfect time. If you've been on the fence, we know it's a super valuable platform. You can get this discount. A lot of people are trying it out. Check out our code finchat.io/chitchat. You've heard us talk about them time and time again. Get 25% off for a limited time with the Black Friday sale. All right, Ryan, what are we looking at here?
So this, they report remaining performance obligations, which is like revenue to be recognized beyond uh next 12 months. So, and then they don't actually break out. There's like current remaining performance obligations, which is like any revenue to be fulfilled or serviced in the next 12 months, I believe. And then there's like long-term RPO. Um, it grew, these are the percentage changes. It grew 46% year over year. Annual recurring
Which one?
revenue, remaining performance obligations, long-term total remaining performance obligations grew 46% year over year. Annual recurring revenue, which is basically your immediate revenue extrapolated out 12 months, especially for a software business, grew 27%. This is the widest divergence in those two figures that they've ever had, as far as I can see. So, remaining performance obligations grew at almost double the growth rate of ARR. And I was like, at first, you see the RPO figure and think, ah, that's good, I guess. I mean, it's strong growth rate, it's revenue to be recognized over the future. But it makes me think that they're just like apologizing to customers and giving really long-term discounts. Like giving, oh, okay, we'll give you an extra 2 years, but it's like it's not valuable revenue today, or maybe they're doing some sort of long-term discounting. And someone asked about it, and maybe this is me just looking at it with a critical eye, but someone asked about it on the conference call, and he basically just like wouldn't give the CEO would not give the number. So the guy said, he said, he's like, first of all, I just want to thank you for always being so honest on these calls, like really kind of buttered up the CEO. He's like, and in the spirit of that, would you mind explaining why there's been this giant divergence? And he's like, and could you maybe give us some context on the current RPO, which he just did not give out. And he gives this answer. He's like, so I think ultimately when we think about RPO, we think about the increase, it just talks to the longer deals, longer duration. I think all the things we've talked about. Yeah, and it
A lot of
basically,
thinking.
yeah, it's like a two sentence answer. He doesn't go into it very much, and then someone comes back and is like, "Hey, can you elaborate again?" And he gives a 2 sentence answer and he ends the call. So
Wow.
I don't know if they're just trying to. It's, maybe it's not a big deal because at the end of the day, it is probably serviceable revenue. Hopefully, it's not like super long term deals, but um, yeah, I thought it was weird, and I think that's probably why the stock it initially dropped like 1% after hours, and then today it's down, I think 4.5% after I checked. So I think the lack of clarity on that call is probably why investors are a little worried. Um, but yeah, that for anyone that doesn't know, Brett just mentioned it. We just use FinChat for that. I also use them for the conference call transcript, the report, the slides, everything. We use it for all our financial data. 25% off. They don't do sales. We don't do sales like that very often, but we like Black Friday sales. So if you've ever thought about it, now would be the time to do it. 25% off. Use our link in the description.
Yeah, that CrowdStrike stuff seems suspicious. Not too suspicious, but a little suspicious. It's very Autodesk-y. It just sounds like some Autodesk mumbo jumbo that would get thrown around. We're changing our payment collection strategy. We are our current RPO is growing fast. I don't know, our total RPO, blah 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 blah. It's like, all right, what's your revenue like? What's your earnings like? Just tell me. Just tell me. But
Yeah.
it makes sense that this would happen if they're dealing with the fallout of that incident, which cost Delta Airlines, I think, what, $500 million. So, all in all, looking at the long term, looking at those numbers, what was it, 27% ARR growth? It's kind
Yeah.
of hard to see in that screenshot.
Yeah. It is
That's
still worth
that's
noting.
good. That's pretty
Yeah.
good.
It's worth noting that they broke the internet. You would think every single customer would be absolutely livid. Maybe there's some long-term repercussions from this, lawsuits, things that work themselves out over time, and they lead to expenses for CrowdStrike. But uh, customers seem to forget because the ARR growth is still there, and it was pretty impressive. So it's a business. I guess the people like the product.
That's a good way to put it. All right, you want to talk Mexican tariff threats and my relationship to Mexican stocks?
Yeah, your
We
relationship
may
with
have
Mexican
a
stocks. Yeah, go for it.
yeah, the Mexican stock market. We may have some, you know, the incoming presidential administration may be ladder attacking my my long Mexican thesis. But here's what happened for anyone that doesn't know, because I know there's a lot of information coming around with the presidential transition. The incoming administration is threatening 25% tariffs on Mexican goods across the board unless they solve the drug and cartel problem, which I gotta say is a vague kind of idea to solve. And I don't know if that's even possible, even if you, it would have to get pretty messy to solve that. But in relation to financial markets, relation to stocks, Ryan knows, listeners know that I'm very interested in Mexican stocks because I kind of think, and we just did an episode on that. You can get some companies that would trade at 40 times earnings in the United States, trading at about 13 times earnings in Mexico. So, you know, that that makes me interested. Now, on this news, the peso dropped versus the US dollar. And what happened, and I don't know what's going on with my lighting here. The listeners don't really care. Oh, geez, wrong direction. Uh,
Listeners
listeners
don't
don't
care.
care. So we're just listening there. Yeah. Peso is down 17% in the last year versus the US dollar. It fell a lot after this announcement. And there's not much else but the announcement because, it's just kind of ideas of what's going to happen when the new president comes in. For international listeners, that doesn't really happen until January. What are your thoughts here? Embrace it, go into buying the dip, buy on the news, or is the thesis potentially threatened here, Ryan?
Yeah, well, I guess it depends on the business. I'm not sure it would impact Bolsa Mexicana, the stock exchange, a whole lot there in Mexico. Maybe some of the companies listed there, it might affect them, but kind of that's more second, third order effects. Um, anyone that's exporting, Yeah, that's potentially quite an issue. I tend to think,
What's interesting is it's gonna be more US companies or international companies selling into the US, where they for example, the automotive industry has a bunch of factories in Mexico now, and you have someone like General Motors, I don't know if they exactly have them, but say a General Motors type company has a factory down there, and they're gonna be selling into the United States as opposed to, for example, an Alsea group, or I think it's group, maybe just Alsea. They're the owner of a bunch of international restaurant brands like Starbucks, Domino's, or they operate, excuse me, a bunch of these in Latin America and Europe. Is that gonna affect them that much? I don't think so because you have a lot of the product moving in the opposite direction.
yeah, and the nice thing is,
So what
it,
is your answer? Does this make kinda, wishy-washy? Because I know you still don't own any yet, Ryan, you gotta join the club.
sorry, the audio was kind of breaking up there, but I think I got the question.
Oh, sorry.
It's all good. Yeah, I think you're probably going to get some indiscriminate selling from a lot of the Mexican indexes. So people that are just selling off the Mexican index on this news, and any companies that are included in that, um, where they might actually not be that impacted. So I'm guessing Alsea kind of gets thrown into that bunch. Um, the yeah, automotive companies would probably be hurt by that. I tend to think in general to fade stuff like this, where it's kind of a negotiating tactic from our incoming president's perspective, is what I'm guessing here. And it's more meant to be a threat to kind of, I guess, encourage them to help with the border patrol issue. Now, it just seems, if we go back to Trump's first presidency, there was a lot of stocks that would be short term impacted by certain statements by the president. And then it didn't really affect the business that much.
Yeah, tweets, which are now on, I guess. Yeah. Now it's screenshots from his account on another platform, whatever the one he owns.
Yeah, I think it's probably gonna be a good opportunity to buy Mexican equities in I already thought it was a good opportunity to buy Mexican equities, certain ones, not all of them, of course. But this probably makes it even better if the stocks are selling off because of this, because a lot of them just simply aren't going to be impacted.
Yeah, and then the one thing people could have, which could obviously get hurt, is the reshoring narrative, where you go, all right, well, I thought all the manufacturing because of the tariffs was going to leave China and come to Mexico. I would say, as Ryan just mentioned, the announcements, I know it causes confusion. I know it's just all this uncertainty. They never mean they're actually getting followed through. The ones on China have happened. And the last time the Chinese tariffs went through, which there's threatened to be much higher now than what this Mexican proposal is, there was a switch from Chinese manufacturing to Mexico. Now we'll see how much or how healthy the relationship is between the Mexican government and the US government, but I think over the long term, regardless of the president, who's the president of Mexico, who's the president of the United States, there seems to be, and I would be confident in the embracing of Mexico and further strengthening those ties versus China, which seems to be an actual geopolitical adversary. So I don't think it affects much of the thesis whatsoever. And I look at stocks like the Mexican airports, which in peso terms haven't gone down that much. But if you're a US investor, I guess, they've gone a little bit cheaper, especially if you think there's going to be a lot of foreign tourism from the United States that goes down there still. See something like OMAB, that's the ticker. It's got a healthy dividend. You have Alsea Group. Actually, I think it's just Alsea. You have the Mexican Stock Exchange. You have Walmart Mexico. You have plenty of stocks out there. I think at least, and especially because as we're going to get talking into bubble talk here, the U.S. market, I struggle to find I struggle to find companies now worth investing in.
Well, here's something you could invest in, Brett. Hawk Tuah coin. If you do you want to
Yeah.
head on into that segment? I can't help but laugh just
Wow.
hearing about it.
Yeah, I just had a little note here called "What part of the cycle is this?" I guess we can ask. It's a little bit of a rhetorical question. It says, and this is from Cointelegraph, verified account on Twitter. America Today, all caps. Haley Welch announces that she's launching the Hawk meme coin on December 4th, one day before my birthday. Wow. HAWK for those interested. I just think at some point they're going to take all the tickers, and then searching for tickers on Twitter is just going to get entirely ruined.
Oh, it's become a
Wha-
nightmare.
wha- this has got to be one near the top of the cycle. I have another one that actually makes me think that we're literally doing the exact same thing. OpenAI has just received a $1.5 billion investment, Ryan, from SoftBank
We're back.
and the
We're
Vision
so
Fund
back.
2.0. This is it's the exact same thing.
Yeah.
Are we not? It's I understand in 2020 and 2021 we were part of this. I don't think we were the extreme part, but we got hurt by it as young investors. We hadn't experienced the dot-com bubble, and we couldn't really understand what something looked like. But 2020 and 2021 were a couple years ago, and do people really have this short of memories? The indicators are the exact same, and it is a time to take risk off the table. I mean, you got something like Rocket Lab, company I like. Unfortunately, I didn't invest in it. I thought it was an interesting growth stock. Back when it was at, where was it at earlier this year? Let me just get the numbers correct here. Let's say earlier this year in the spring, thought it was pretty interesting at like five bucks, under $5 a share. Well, it's up 500% in the last year and it trades at $25. Price to sales ratio pushing 35. It's a low margin business. It's high risk. They literally launch rockets that are not that right proven yet. They are unprofitable. I mean, if you own Rocket Lab, you have to be taking money off the table. I've seen people in Palantir, smart investors, said, look, we love this stock. It's done extremely well for us, but we're trimming down our position. I mean, the valuations across the board here, you cannot let the mistakes you made in 2020 and 2021 affect you again. And if you do, I just don't think you got to look yourself in the mirror.
Yeah. To touch
Little
on
rant there. Sorry.
no, it's good. To touch on the meme coin, the Hawk coin, for anyone that doesn't know, it's someone that got famous doing some, basically not even a bit on some video. Not gonna go all into it, but it's like a meme, like she got famous on a meme, and here's the part, like, I don't care. You know what? You get famous on some random video, you wanna make a little money, that's fine. The part that kind of
Sure.
pisses me off is you've got before this, she said, like, "I wanna thank Michael Saylor for helping inform me about Bitcoin and, like, helping me, like, get
Yeah, yeah.
understand it." As if, like, she genuinely like, she's doing this because it's, like, her genuine interest and she, that's she's done her research. Sorry, not to be too derogatory here, but and then she slips in, "I'm also producing my own meme coin." And it's like, okay, just if you're gonna try to just profit off it, just be straightforward about it. Like, I I got famous on a meme, now I'm putting out a meme coin. Like, if you wanna buy it, buy it. But to pretend, I don't know, the whole, like, "Oh, I'm so interested in it, and it's a real chance for everyone to make money." That part just kinda irks me. Um, it's also yeah, I think we're at it's hard not to feel like we're bubbling again, and
We might be going to extra innings. You know, people ask what inning we're in. I think we might have just finished the ninth, and hey, we're going to extras. Runner on second base.
this is why I want to do the first thing I think is, "J Powell, please just keep the rate hikes coming. It's fine. We need them." The other thing, though, is it makes me think, where am I gonna hide? What where am I gonna get positive returns if we're in an equity bubble and rates are likely going to increase. And I don't really short. I don't. So what am I going to do? I think this is
International, small,
yeah.
deep value, dividend pairs, the bond account at public.com, which you're going to mention here in a second with our advertiser. I want to say there are different levels of the charlatanism, the meme coins, the nonsense, selling magic beans on what, like, I kind of think of it as the concentric circles stuff where most of this stuff won't affect me personally. And I think as long as it doesn't affect me personally, that's fine. But if it's hurting, like, at the next level, if it's hurting a bunch of other people and a bunch of innocent people, like I saw something in the Wall Street Journal where there was a guy, I think it looked like he was in his 50s or 60s. I didn't read the full article, can't remember his age. He got convinced to put $750,000 into a promised 15% annual return fund, and he's likely not going to get any of the money back. Now that affects real people. And then, but I will say selfishly, the stuff that I really dislike and hope like just concerns me are things that could affect my life personally, financially. And the one thing that I think is extremely dangerous and something I am deeply concerned about is this idea that the government needs to print a bunch of money to invest in Bitcoin as a Bitcoin strategic reserve. That's something that actually
Who's
is
saying
not
that?
something to joke around with. Right. Oh,
Was this the one
well, the
governor or
usual
whatever?
suspects.
Sorry.
No, no, there's a lot of people.
This is news to me.
You are the yeah, well, there's ideas floating around here from the usual suspects like Anthony Pompliano, but it's also within the incoming presidential administration that we need to somehow, and this is where the magic thinking comes in because I don't think people actually kind of close the loop on how all this would work, that we need to cancel the debt by printing a bunch of money and buying Bitcoin. I don't necessarily know how this will work, but there's ideas thrown around that it should be $250 billion worth, stuff like that, and that's seriously dangerous. And it's when a meme could actually start ruining things in real life.
It's yeah.
Like that,
It,
that's
it's
just nonsense. It's pure, pure nonsense.
it's not in America's best interest to do that. You have sovereign debt. You have debt that is denominated in US dollars, and you want to spend that dollar buying Bitcoin. You like it's a strategic advantage as a country to be able to borrow in your own currency because you can print money. It
Yeah,
doesn't make
I don't know.
sense to
It
be.
makes
You would be if you should be shutting this down as a government. Like it's a waste of resources. Frankly, it's a waste of energy. I'm sorry. Like Bitcoin mining, I think consumes more energy than the country of Poland. The
yeah. I think Argentina too.
and
Well,
it's a
finances
misallocation.
terrorist groups use it too. Yeah, yeah. There was just a story today about the cartel, or maybe this week about the cartel using it.
Yeah, I don't know. I don't want to turn this into a whole crypto thing because it just doesn't make it any fun. And I hate going round and round in circles about it, but it doesn't make any sense from the government's perspective to do that. All this to say, bubble feels back. Be creative with how you deploy capital. Be thoughtful about it. This is not the time to compromise on valuation and turn, kind of look away. I think be cognizant of it and try to find areas where you can get a real return. Maybe a dividend play.
I think we should bring Hawk Tuah on. We should bring Hawk Tuah on Chit Chat Stocks, and she can enlighten us about how Bitcoin yield and how that's going to help, you dynam make the US economy a dynamo again. I think you know, it's really gonna be good. That's gonna be great stuff. And I will say one thing, and people are gonna, I know the Apple lovers are going to get upset when I say this because I'm just using it as an example, but it is true with that company. You can't just hide an Apple at 38 times earnings with them not growing. You have to make a decision. Buffett is making a decision. I think you can just follow him and say, "Look, this is not the time to own Apple." Take some off the table. I know so many people have it as a giant percentage of their portfolio, and at least trim, because that it I don't know. I'm kind of on my soapbox today, but it's a very frustrating time. It's not like I'm doing poorly. It's not like I made a bunch of mistakes, but I just see so much of the same things that happened in 2020 and 2021, and not very many people changed.
Apple versus a high yield savings account over the next 10 years. Who you taking?
Ooh, that's a good bet because I guess that interest rate on the savings account could change. So not even locking in a 10-year. Can I say lock in the 10-year treasury?
Sure.
Can I say that instead?
Yeah, yeah.
I'm guessing. I think that's about 4.5%. Let's assume taxes are equal. So no taxes. I'm taking the treasury. I mean, Apple's
Yeah,
at what? What is that, like a sub 3%? Sub 3% earnings yield?
yeah.
Something like that?
It's got to be. Yeah. And it's risk free, the treasury side of things. Like the earnings side of things for Apple is certainly not risk free. Do you know?
And talk about high yield. Why don't we, before we go to our final topic in your small cap of the week, talk about our friends from public.com again, Ryan?
Good call. All right, heads up, folks. Interest rates are falling, as we have alluded to here, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield is not locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks. All right. I, yeah, Apple. I get it. You don't want to take the taxes. It's harder to sell, whatever. It's maybe a huge position, but it feels extremely overvalued, in my opinion. Um, I just that's purely based on the fact that I just don't think earnings can grow that quickly. At this point, services accounts now for 40% of revenue, and I think some of that's at risk with the Google contract and the regulation there. So um, I don't know. I think there's more.
Increasingly at risk too.
Yeah, I think there's more risk to Apple than people think. They look at Apple, they think bulletproof business, and it's understandable. You look around and you see everyone on their iPhones. It's hard not to use that evidence as support for your thesis, but it's gotten a tad bit extreme. What else do we want to talk about here? Speaking of Buffett, did you see his letter?
About the charities?
Yeah, kind of got me
Eh.
a little a little sad.
Yeah, well, I gotta say, I and sorry, I hate saying that term. I gotta say, I should stop saying that, because if you're gonna say something, you should just say it. But I kind of disagree with his charity stuff, giving it to his son. You think he's the best use of capital? If you're really gonna think about this intelligently, Warren, and spend time doing it, I'd say just give the shares to poor people. Just stop with this. Oh, it's going to a charity. Like, just literally give it to people. I can't stand this charity stuff, but it's all so wasteful if you kind of go through the numbers on all that stuff. But yeah,
Maybe. I don't
whatever.
know.
I didn't
I
read the
might
numbers.
agree with it more than you do. Just I don't know. If he hasn't spent a whole lot of time looking at the charities himself, and you've got kids
What's the
that
point of accumulating all this stuff if you're not gonna
because it's
like?
his
Oh,
intellectual
okay, now
interest.
it's just go. I know, but like, what's the point of saying I'm gonna make all this money and give it to charity if I'm not gonna be super prudent on what charities I give it to?
Well, I mean, if you're giving it
I
to
got
someone else
I
to
have a
be prudent
contrarian
on,
take on all that stuff.
yeah, whatever. I don't know. It just made me think this might be we might be looking at some of the last few meetings with the buff dog there. It
Oh
yeah.
yeah.
There was a quote in there. It was Mr. Something about the kind of times finally getting to him, and I guess this is one step in that direction. If you were expecting him to give away or allocate his money to someone else late in or when he's expecting to retire or uh, drop off the not drop off, but leave the company, kind of feels like it's heading in that direction. All right, we've gone. What is it now? 50 minutes, 55 minutes.
Let's talk
Any
small cap
other?
of the week presented by Yellow Brick Investing, right, Ryan? Let's talk about your new small cap.
Yeah, this one's interesting. I I don't feel like I have a real edge here, but I heard a good pitch for it, and so I looked it up on Yellowbrick, joinyellowbrick.com. If you use joinyellowbrick.com/chitchat, you can get a discount on any paid plans, and you can see investor returns. And they're honestly, I love the plot. I love the website, so I recommend checking it out. But the company is Kraken Robotics. So Kraken Robotics manufactures and develops products and technologies intended for underwater exploration, sonar, and optical sensors. The revenue is segmented into products, which accounts for three-quarters of the business, and it's made up primarily of sensors and battery sales, and then services, which is a quarter of the business, but really it's kind of products driven here. The flagship product is the pressure-tolerant battery capable of withstanding pressures of over 600 bars at 6,000 meters depth. Don't know what the bars measurement is there, but with an energy density that offers greater autonomy than the competition. Apparently, it's kind of best in class for batteries in this market. The revenue over, I guess, the last decade has gone from $2 million to, well, I guess $1 million to $67 million over the last 7 years. A lot of that is from what I understand, they have kind of customer concentration where they one of the biggest customers is Anduril Industries. They're a government contractor that makes AUVs, so just underwater vehicles that I think it's autonomous underwater vehicles where people can control them and you can scan the floors and um, you can use the Kraken robotic sensors to take images, and it's been growing really quickly. And they recently invested in a factory in Rhode Island where they're planning to really kind of mass produce these AUVs because there's a lot of government demand for them. This will, assuming that the demand is really high and they're able to increase production. This is Anduril Industries. They're able to increase production of the AUVs by a lot. Kraken Robotics is going to benefit. They investors are thinking that Kraken will be acquired maybe by Anduril. So Anduril will just bring in one of their biggest suppliers, um, which leaves a little upside for the stock there. Kraken stock, though, I might be a little late to the party on this one, is up 231% over the last year. It's big in microcap club as well. So you see a lot of, um, it seems like when you get a microcap company that's pitched in microcap club and does well, all of a sudden you get a lot of people kind of latching onto the story and the thesis. So I'm not really that interested. I don't know if it,
Self-reinforcing. Yeah.
yeah, I'm not sure on the technological advantage. So uh, probably keeps me out. But I guess any interest here, you are our resident engineer on the show. So any interest?
Yeah, it seems like an interesting product, clearly a growth category. What's the valuation we're looking at? Is that your revenue, trailing 12-month revenue, 67 million? You know
I
what
think
kind of
it's,
gross margins they get?
I
Or
don't. I can easily check. I think it's 550 million Canadian market cap. So let me go
market cap
to our
and
good
revenue is
friends FinChat.
67 million. So that's pretty pricey. That's
Yeah,
pretty pricey. Yeah. I mean, I think price would keep me out, but congrats to the people that kind of saw it a few years ago,
basically
or at
50%
least
gross margins.
okay,
Yeah, not bad.
not bad.
But they're still kind of
No,
they're seeing the operating leverage now, so it's going to be real expensive on an earnings basis.
yeah, yeah. The earnings aren't going to look that great, but theoretically, you know, They're not going to have a huge S&M spend. I would hope that they're pretty efficient on overhead, but they're going to probably have a ton of R&D. So, add it all together, you could see at least 10, probably 15% margins, maybe a little more.
14 million in operating income
But
last
does that
12
deserve
months.
10 times sales?
Yeah, probably not. 10 times sales for any business, you got to be confident that the earnings are going to grow. This isn't a business I know very well, and microcaps just have tons of inherent risk to begin with. So let me tell you something.
Yeah.
It's,
I mean, hindsight's 2020, but I could see the risk working, like the risk reward profile definitely worked like the last year, and I could see it making sense about a year ago, but the stock has outgrown a bit of its fundamentals. And hey, if you have high confidence that this can be a 3, 4, $500 million revenue business, maybe it's still a buy today. But given the risk that that might not materialize, and as Ryan said, microcaps are riskier just from a management team perspective, just that the fact that they have to compete heavily against big competitors. Yeah, it just make me nervous here, but it's one, though, given the small size, like, compared to a Palantir's market cap is what, $150 billion now? Kraken Robotics at 50, or sorry, 500 million. I don't know if it would be one I would be selling at this price, just given that, hey, if it's been a winner for you, don't wanna take the tax loss. If they keep succeeding, this could totally be a 10 bagger for you. You know, I wouldn't I wouldn't be opposed to letting it ride, but right now, the brief look, not too interested.
you want me to blow your mind real quick? Check this chart out. This is completely unrelated, but App 11, I don't know if you saw this. This time,
Yeah.
a little under 2 years ago, App 11 had a market cap of 3.6 billion. It currently has a market cap of $111 billion. And it is what is that? Basically a 5 bagger in, no, 10 bagger in less than a year. And we're not talking about micro caps here. Maybe it was a small cap, near a small cap. It went from small cap to mega cap within 2 years, which is mind blowing. What do you think of that?
I guess people love apps. I don't know. Another sign of excess. Regardless of how, just people get during the bubbles or during bull markets, people get very defensive. It's like, well, the business is doing well. Well, it's not doing as well as the stock being up 600%, mind you, going to $100 billion market cap versus $3 billion. I've heard some good pitches. I tweeted something about App 11, like, oh, wow, this is crazy big company for just a random business, and it's up an insane amount. And people who were DMing me like, no, you don't get it. It can get 50% margins. They have this clear advantage. I'm like, so what? What multiple of sales are they trading at? It's the same stuff we were talking about in 2020.
26.
Yeah, it's the same stuff. What is this, Unity 2.0? Remember that debacle?
Unity. Did you ever follow that? Did you ever see what happened? John Riccatello, our favorite, not really. I'm saying that in jest. He's the CEO that somehow keeps getting CEO
Oh,
gigs, and he's like just destroys everything he touches. John Riccatello instituted a new flex pricing model, which like ruined the business, it seems, because a whole bunch of their customers. I don't know if I've ever seen this much of an adverse reaction to price increases from in any business I've looked at. The pricing model changed, uh, and customers fled. The last thing you want to do on a pricing model change or a pricing change in general is make it so complex and such a big change, not just in the
yeah.
price, but how you're priced, that you encourage customers to look for alternatives. Um, and that seems to be what John Riccatello did. They have since replaced the CEO, and they said we're working on raising prices in a more customer friendly way on the latest call. So we'll see.
Yeah. price increases that are customer friendly. I'd like to see that ever occur. For anyone that is wondering, at the peak, November 12th, 2021, Unity, and this is on Google, so it's not maybe not exact. Let's just say around $200 a share. Today, 23.38. This is going to happen to a lot of the stuff right now. And
And
that
that's
just
probably
is.
up a bit. What was it at its lows? Or is that at lows?
I can't find the exact lows, but I'm seeing 15s. Let's just say 15. Yeah. Market cap still $10 billion.
Okay, so now that we've had a whole podcast about the excess of the current markets, we're going to have to follow this up with where we're looking to hide in a bubble. So you can expect that on your podcast player. We're going to have one of those coming. So not sure when,
But
but
yeah.
yeah. What else is on the docket?
Oh, let's see. Show on David Gardner. Gonna have a research episode on a cannabis retailer from yours truly. I think that one will be fun. Definitely some people like cannabis, some people don't, but it is an interesting industry and went from really loved to hated. So I think that'll be fun. And we have some interviews coming up on Meta platforms, an update on the cloud and AI sector as a whole from an expert in the industry, and ASML. I won't leave out, or I'll leave out the guests, but they should be fun. And I think they are all well versed in the topics that we're going to be covering. And yes, when you mentioned the not just complaining about the market bubble, it can be fun. And I think we try to make it a little bit entertaining on talking about the market bubble for stuff like Hawk to a coin. I mean, that is just pure absurdity, but it is more value added for the listeners if we can actually discuss stuff that you can potentially do with your own portfolio to make sure you're not, I guess, in danger when we head into the ninth inning, or I guess maybe we're nowhere near to the ninth inning. It could just be the early innings, but when you head into a bubble period and things can get quite dangerous for your portfolio. All right. Anything else, Ryan, before we sign off today?
I think that's it. Just a reminder, if you've made it this far, if you've ever thought about investing in a stock research platform, FinChat is currently 25% off all paid plans, and we use it every day. It's really valuable and critical to our own research. So highly recommend checking it out with our link.
Yep, that's perfect. And if you made it this far, give us a review on Spotify or Apple Podcasts. Best way to support our free show. That is Spotify or Apple Podcasts. Give us a nice 5-star review. Takes you 10 seconds and it can provide a ton of value for us and keep this thing pumping along. All right, disclosures. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I or any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, once again, and we'll see you next time. Okay. Well, my Wi Fi was better, but